Hi traders, this is Dale Pinkert, Twitter handle at Forex Stop Hunter. I'm going to start with some shorter term charts. I want to start off with US dollar yen. As you know, I've been talking about a correction in an ongoing bull market all the way back to when we were trading above 112, and my targets were the 110.80 level, then eventually 109.40. This is close enough for government work, so well, we could continue down there. What could accelerate it, and I'm not looking to step in front of a falling knife, would be a sell-off in the market, although we have news through the Mueller report, and I would expect some relief in the market. In fact, hoping for a Mueller type bounce to sell rips into in all the stock indexes, as well as the crude, which also put in a very negative day. Here's the 1 hour chart on West Texas. The crude, as you can see, we had a rising wedge. This was a new high with all kinds of divergences at the big round number of 60 bucks. So if we get a rally back to the confluence, caught this late last week, covered, looking to recommit up around 59 and a half. There is an outside shot for another move towards 60 and a half if the stock market can make new highs. But as I talked about earlier in the week, there were a lot of divergences. Even though NASDAQ and S&Ps were making new highs, the Russell was rolling over. Take a look at your daily Russell chart. Take a look at the bank index chart. Take a look at FAZ, F-A-Z, as a bearish ETF on the banks, and you'll see that the move in interest rates by the Fed was not liked by that sector. And also what gives me conviction about even if the market recovers early in the week is this VIX chart. Last week I was showing the potential divergence when we're trading about 13. Not exactly the bottom, but what's impressive about this rally in the VIX, if you look to the left, 2 weeks ago when the market sold off and I thought the top was in indexes, uh, we rallied back to almost that level. And that's with indexes well above the price level that we had the last time the VIX was up towards 18. So with hardly any downside pressure, mainly just one real negative day on Friday, the VIX is demonstrating some very resilient relative strength, almost achieving the same level it did when, say, the S&Ps were 150 handles under here. So I still lean towards risk off. If we have some risk on because of Mueller, be looking, like I said, for shorts in crude and also potential break in the VIX. I don't think it should close back under 1450. This is Dale Pinkert, trading coach at the Eagle's Nest. You could contact me if you're interested in learning a little bit more about my teachings on Twitter at Forex Stop Hunter. Good hunting. Remember, don't just count your pips, count your blessings. Everyone have a great week, and I'll talk to you tomorrow.